Hello everyone. Welcome to our channel, where today we're going to talk about something we all face at some point in our lives, debt. It's a touchy but crucial topic, and we're here to guide you through the wisest financial decisions. So, if you're ready to learn the 5 things you definitely shouldn't borrow for, let's get going. 1. You shouldn't borrow to buy a car. Let's start with the first of our lessons. You shouldn't go into debt to buy a car. Buying a vehicle can be exciting, but the financial implications can be overwhelming if not handled properly. When you decide to finance a car, you're not only paying monthly payments, but also all the additional expenses, insurance, gas, repairs, and the list goes on. It's crucial to consider all of these costs before committing to a loan. The reality is that while cars are necessary, it's not always wise to go into debt to get one. If your budget doesn't give you the go-ahead, it may be best to wait and save before jumping into that debt. Some experts suggest that you're truly ready to buy a car when you can afford it twice. However, there are situations in which a car can become a tool to generate income, such as using it for work. In those cases, taking out a loan may be an option, but always with caution and evaluating your real ability to pay. So, think twice before going into debt to acquire that vehicle. Saving in advance can be the key to avoid financial headaches in the long run. 2. You shouldn't go into debt to go on vacation. Who doesn't love a good vacation? But here comes the second important lesson. You shouldn't go into debt to go on vacation. Yes, it's true that experiences are worthwhile, but not when you have to pay for them with borrowed money. Let's imagine 2 scenarios. The Gonzalez family decides to go to Cancun, while the Martinez family chooses a closer destination, such as Cartagena. Both families enjoy their time, but the way they pay for their vacations makes the difference. The Gonzalez family, excited, charges all their expenses on a credit card. The laughter and fun are priceless, but when they return home, reality hits. The bills and interest add up, transforming those happy memories into a financial burden. On the other hand, the Martinez family, although they did not live such an exotic experience, returns to their daily routine without the burden of debt. They decided to live within their means, enjoying the present without sacrificing the future. So, is it worth going into debt for a dream vacation? The answer is a resounding no. Vacations financed with our own money are much more enjoyable without the burden of debt. 3. You should not go into debt to buy consumer goods. Now, let's focus on the third vital lesson. You should not go into debt to buy consumer goods. That urge to have the latest and greatest may be tempting, but it rarely brings the lasting satisfaction we expect. Imagine buying that brand new television or the latest model of cell phone. Yes, at first, the thrill and joy is there, but here's the uncomfortable truth. That happy feeling usually wears off faster than you can pay off the debt. In addition, lenders often charge higher interest rates on consumer debt, justifying the risk they take. What may seem like a harmless purchase can actually become the most common reason for financial problems. Consumer debt, though small in amount, can quickly accumulate and affect your financial stability. The alternative? It's much more satisfying and pocket-friendly to buy these things with your own money. Instead of going into debt, consider saving for those treats. That way, you'll not only avoid high interest rates, but you'll also retain a sense of happiness and accomplishment for longer. In short, before going into debt to satisfy a momentary desire, think about the duration of that happiness compared to the duration of the debt. Prioritizing your personal finances over the impulse of short-term consumption will allow you to enjoy a healthier and more balanced financial life. For you shouldn't go into debt to buy pets. Let's move on to the 4th important lesson. You should not go into debt to buy pets. Owning a pet is more than just a whim, it's a long-term commitment and responsibility. Sometimes people jump into pet adoption without considering the associated costs. A cat or dog requires not only food, but also veterinary care, toys, and sometimes care services if you're away. Borrowing money to buy a pet can get you into difficult situations if you can't cover these unexpected expenses. Here's the reality: you don't need to go into debt to get a pet. Instead of buying, consider adoption. There are many pets waiting for a loving home in shelters and organizations. Before making this decision, check your budget to make sure you can provide the necessary care. Responsible adoption avoids situations where pets are abandoned due to financial hardship. Don't fall into the trap of giving pets as birthday surprises without thinking through the financial and logistical implications. In short, pets are a joy, but it is vital to plan and assess your financial ability before making that decision. Don't go into debt to get a pet, adopt responsibly and enjoy the company of your new furry friend without financial worries. 5. Don't go into debt for a wedding party. We come to our 5th crucial lesson. You shouldn't go into debt to throw a wedding shower. Starting life together with a financial burden is not the best way to build a solid future. It's tempting to succumb to social pressure and throw a lavish wedding, but the reality is that marital debt can become a significant burden. It's important to ask yourself, do you really need to spend that much in one day? Before planning a wedding, consider your finances and whether you have the budget to cover the costs without resorting to loans. Instead of wondering what others will say, ask yourself if your loved ones will be there to help you pay any debts that may arise. The true beauty of a marriage lies not in how much you spend in a day, but in the quality of the life you build together. Make wise financial decisions early on to avoid stresses and challenges down the road. So, the next time you're faced with the decision to throw an extravagant wedding party, reflect on what really matters. Do you want to start your life together with overwhelming debt or with the certainty of a solid financial future? 6. You shouldn't go into debt to take a risk on an investment. We come to the last lesson, but certainly not the least important. You should not go into debt to take a risk on an investment. Investing borrowed money, whether in stocks, cryptocurrencies, or any other market, is often a dangerous game. Emotions play against us when we invest money we cannot afford to lose. Under pressure, irrational decisions are more likely, which can lead to significant financial losses. In addition, borrowing comes with the obligation to pay interest. If you lend money at 10% interest, for example, you need to earn more than that percentage just to cover the cost of the debt. And remember, taxes are also paid on profits. The golden rule for successful investing is simple: only invest the money you are willing to lose. Borrowed money does not comply with this rule and can get you into unmanageable financial situations. And while the subject of borrowing to develop a business is a large and complex one, we'll leave that for another time. If you take away 3 lessons from this video, let them be these. First, emotions are the worst advisor when borrowing. Second, a purchase brings additional expenses. And third, don't go into debt to get what's outside your budget. I encourage you to make informed financial decisions and avoid unnecessary debt. Is there anything else not worth going into debt for? We want to hear from you. Leave us your comments and we appreciate your time watching this video. See you next time.